This is the 2025 FOREX Trading Empire Mentorship Program, Lecture 31. The topic for this lecture is daily review. So I'll be going through a daily profile, explaining on what price did, and we'll be pointing out the trade and all the type of way for you to anticipate price. First, we'll be talking about the daily bias, discussing on how I determine the bias for the day, and how you can apply multi-time frame and what are the structure you'll be identifying from each individual structure and what you're waiting for from every time frame that you're executing your trade. So let's move to the chart. So I'm on the daily time frame of GBP USD. So first, before trading on any individual day, first determine your bias from the higher time frame. And currently I'm on the daily time frame. Now the daily time frame, now what I'm trying to anticipate if today is going to be an up close candle or a down close candle, or what's going to be the next daily draw on liquidity. Where if I'm going to the lower time frame, I'm anticipating price to trade to that draw on liquidity. So in this review, I'm going to talk about trend continuation candle. In the CRT series, I talked about two consecutive down close candle. When you see two consecutive down close candle and you can identify that price is trading to the next draw on liquidity, which is this swing low, and you can find two down close candle where price from two down close candle and you are anticipating price to run out the previous day low as your daily target. So you are anticipating the third candle to form a swing low to run out the previous day target to form a three consecutive down close candle. So one, two, three. During this process, you can see price form the fair value gap. So I call it the trend continuation candle because when I see two consecutive down close candle and I'm not anticipating any reversal, then I'm anticipating price to run out the previous candle's low. When price runs out the previous candle's low, then there might be a retracement back to the range, which that is not my personal target, unless price in the price range where I'm anticipating a continuation lower, maybe from a weekly time frame or price respecting a daily fair value gap. Those are the times where if price were to run out the previous day low, then I'll still be anticipating a continuation going lower. But in a scenario where price already took out the buy side liquidity from this swing high to the swing low, price already took out the buy side liquidity. Now price is in a deep discount and price might retrace back to a premium level at any time. So having that in mind, that price might retrace at any time to the 50% level. Whenever price takes out the previous day low, then I will wait for that reversal before looking on where I should trade next. So my bias for this trade review was I was anticipating lower prices to run at the previous day low. Now moving to the chart, price respected the daily fair value gap. When price took out the sell side liquidity, price have been on a steady downtrend. Price retraced the daily fair value gap, traded lower with this down close candle, high impulsive down close candle. So I was anticipating price to run out the previous day low before any retracement higher. That was my target for the trade. So moving to the 1 hour time frame. On the 1 hour time frame of GBP USD, you can see from the opening price that price opened, traded to the 1 hour fair value gap, respected the 1 hour fair value gap, took out the previous day low. Now this is one of the most easy to identify trade because this is an easy power of three. From the opening price, 1 hour fair value gap, trade lower. So you can call this set up the easy power of three from the opening price, trading above the opening price to capture premium liquidity, doing a 5 minute or a 15-minute shift of structure from the lower time frame, trading lower, and this should be your entry level. So going down to the lower time frame, if I were to go down to the lower time frame to look at this price, I'll be focusing on the my own personal trading time, in which I'm personally looking at price. Which in this lecture I'll be talking about the 3 a.m. to the 4 a.m. or we can see the London section and the New York section Q zones. So both those Q zones, you'll be looking at price. If price have traded to your targets, then you're not looking for any entry, or if you're trying to trade a counter trend, which is trying to catch the reversal going higher. If price were to run the previous day low and do a retracement back to the range, you're just looking for that simple reversal trade. But if you had to stick to the trend continuation going lower, as soon as price takes out your previous day low, you're not looking for any entry. Now you might take a trend continuation, which is going to be a high risk trade, but it's mostly going to be based on the higher time frame. If there's a liquidity close by, if there's a 1 hour liquidity close by, then you can use that 1 hour liquidity as your next draw on liquidity if there's any potential for any continuation going lower after running at the previous day low. But in this example, my target was to see price run the previous day low, then I'm done for the day. So turning on the section indicator, I took this trade during the London section when price was still inside the 1 hour fair value gap on the premium level, measuring from the swing low to the swing high. Price was above the zero point 0.5, which is the 50% level. Price was at the premium level. So when price was at the premium level, a lower time frame shifts in structure, leading to lower prices. So first, let's go to the 15 minutes. On the 15 minutes, you can see the clear trend, shift in structure, 15-minute fair value gap. And if you notice, the fair value gap forms at 3:15. Price open at 3:15, form the fair value gap, and this is your 3 a.m. to 4 a.m. entry. So you set the limit order, price retrace to the limit order, decline lower, taking out the previous day low. Now looking at this chart from the 5 minutes, you can still identify the same thing. So I told you guys to toggle through both time frames to make sure you look for the time frame that describes it more better. Sometimes the 5 minutes will give you an early entry, while sometimes the 15 minutes will give you a good area to place your stop. So it's best for you to look through both time frame. On the 5 minutes, shift in structure, retracement, 3 a.m. to 4 a.m. fair value gap. You can see is aligned with the 15-minute fair value gap. So this is a high probability setup. Your target is to see price go for the previous day low. Now you can personally do your own personal study on this price chart, which I think is on a clear description. There's a little continuation during the New York section going lower, but I wouldn't explain it because I wasn't anticipating price to continue lower. I was actually looking for price to trade back to the range, but that is a low probability setup because it's counter to the daily bias. So I was just looking at price, waiting for the 10 a.m. retracement, which price did retrace around the 10 a.m., but back to the daily range, which would be around the 50% of the daily range as your target. But I'll be doing a full lecture on how to trade the counter trend of the 10 a.m. retracement, which is the last trading hour of the London section. There's a retracement that goes back to the daily range. You'll be looking for your target around the 0.25 level or zero point 0.5 level, which is the equilibrium price of the day, the mid range of the day. For studying price from this price range, where price did this 5 minute shift to structure inside the 1 hour fair value gap, is a clear description of a power of three. Price open, accumulate, did a 5 minute shift in structure, distributed lower, look at the previous day low. So that is all for this lecture. See you guys in the next lecture.